Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, June 20th, 2011 is brought to you by Realtic. Alright, guys, let's get right into the mix today. The markets are having an update, although it's not a huge update, but there are very significant things at work. Now, let's discuss exactly how this day has played out so far, as we are after the lunch hour now at about 1 p.m. Eastern Time. Bottom line is this: the markets had a gap lower today. You can see perfectly gapping down to the pivot low from Friday, right here at 126.62. Now, the key about that level right there is that it is Friday's pivot low, therefore you expect there to be support at that point. Sure enough, no sooner did we gap down, the market started to rally to the upside. Volume today is very, very light, which again helps the rally mode. The lighter the volume, the more likely the markets can float up, and that's generally what we see throughout history. Light volume equals neutral to upside in the market. So again, the market's open at that point, and remember the SPY is what you're looking at on a 10-minute time frame. Each candle is 10 minutes, and it mirrors the S&P 500. The SPY is the ETF tracker for the S&P 500. All right, the market's again rallying up, 3-bar surge right into the 50 moving average here. Then you get a 1-bar pullback. You start to rally up again, go through the 50 this time, go to this little pivot high right here at around 127.60 or so. At that point, a 2-bar pullback, and then another surge up, taking you just above the 200 moving average, right to this little pivot top from Friday. So it's kind of interesting to note that we are now trading from the lows from Friday to the highs from Friday. See, here's the low right there, and there's your pivot high right up here. And in fact, we ran into that level multiple times and still could not break through. Now, you might wonder why that level is so strong. Well, obviously, it's the 200 moving average right below it. In addition, you have a pivot top from Friday, but there's more to it than that. In fact, this is one of the biggest things you will see in these intraday videos, folks, that I'm going to show you right now. I want you to zoom out on your chart right now. Zoom out. And what you're going to see here is a pivotal, in spirit of, inverse head and shoulders pattern. You want to see it right now? Take a look. Here's your left shoulder, down and up. That's a shoulder to the downside. Remember, inverse is a bullish pattern. All right? Here's your head, right there. Here's your right shoulder, right there. See, you have a shoulder, head, shoulder. It's an inverse, meaning an opposite head and shoulders. Usually head and shoulders are up, and that's a bearish pattern, and inverse is bullish. And the neckline is what you're looking to see a break of. All right, and the neckline happens to be coinciding with the exact pivot highs of today. Here's your pattern right here, guys. Take a look. Connect this shoulder, this neckline, to this neckline right here, and drag it across, and you see it comes right into that exact area that the market could not break out from. Now, an inverse head and shoulder is only in play and can calculate the target only if the neckline is broken, meaning you have to trade above this level. If you trade above that level, you can then calculate the inverse head and shoulders target, and the market should have a bullish move to that point, most likely during this course of this week. But that will only, and I repeat, only happen if we close above this area. You have to close essentially above 128 on the SPY at any candle, and that should put it in play. And again, we will watch for that. But again, isn't that amazing, folks? How you have this pattern and the market just cannot break through. And again, the pattern is bullish, but it's only bullish when it breaks through that point, and it still hasn't done that. So we're waiting to see if this at some point today, tomorrow, comes up and takes out this line, and it should cascade a target range. Get this, $130 on the SPY would be your general target. All right, now there's a little bit of calculation that we factor in there, and obviously that's where we're getting the target from. We're able to calculate targets of head and shoulder patterns, inverse head and shoulder patterns, and more. But again, you have to join the research center. You have to join the intraday stock chat. Take our webinar, which is the methodology webinar, which goes over cycle analysis as well as count systems and so forth that actually work. So again, the free trial is available for those that want to try the research center and the intraday stock chat at inthemoneystocks.com. And you'll learn this. I'll go over this more in the nightly video tonight. But it's an amazing inverse head and shoulders, which again is bullish, but only if it takes out this level. And the target, if it takes out this level, would then go all the way up to about 130 on the SPY. All right, so that's a very fascinating thing going on here. What you have to say, folks, this was your buy scalp right here. Look at how perfect that is. This was resistance right here. When you hit it, you could short it, and that's what we talked about in the intraday stock chat. There's your short for a beautiful pullback. Finally, you broke above. You confirmed above that pink trend line. Therefore, first hit of it would be a scalping opportunity. It just came down and tagged that during this video. You're watching it live as I'm watching it, and sure enough, you get the bounce right there. It's a beautiful thing, guys, I have to say. You got to know this methodology. You can make so much money knowing this methodology. It's almost ridiculous. All right, so that's your intraday analysis right now, folks. Let's go on to a couple other stocks out there. What are the lagging stocks? What are the leading stocks? Let's talk a little bit about that. Well, first of all, Apple Computer. Apple Computer continues to be a laggard, but it is $5 off the lows of the day. Take a look at this chart on the daily Apple chart. The Apple daily chart is significant because you actually gapped below this pivot support area. Notice how you 2 days in a row, Thursday and Friday, hammered on this green trend line, which is this pivot right from here. It finally gapped below that. That can be construed as a river theory, and your next target, guys, this is your next target, is 300. So now, granted, it has a nice reversal here, just down 5. It was down 10 on Apple, but we have to see where this goes, guys. Again, it could be a river theory. It could be headed here. I will not buy Apple until it gets here, even if we get a bottoming tail, which it's close to on the daily chart. I don't think I'll go and test it out because you're in no man's land down here. Only if by the end of the day it recaptured this green trend line, then I would be more bullish on it. But as long as it stays below there, there could be a river theory there, and I will not mess around. Now, what's a river theory? Again, join the research center, folks. Take the free trial. You'll learn, okay? All right, Google. This was a great call, folks, today. I gave Google as a buy alert via the Pro Trader watch list as a bullish play. I gave it to the chat room as a swing trade, a beautiful swing trade here. The level that we were looking for was, see this little consolidation pattern right here? See how the market or the stock on Google moved up into that, then consolidated, and then broke out? That becomes a support area on any sort of retracing. If you take your trend line right here and draw it across, it gets a perfect low, even number pierce of 480, which is the level that I gave out as a buy. The low of the day was 479.23. Everyone should have gotten filled who wanted that play, and sure enough, it's all the way back to 485. You're $5 in the money already. We nailed the low on Google today. Should this trade up higher? Yeah, I think it will trade up a little bit higher over the next few days. I do expect the market to have a possible little bit of a float, especially if we get closer to getting aid news for Greece, which again should push the euro up a little bit, and then obviously the dollar should come down a little bit in response. But again, that is a nice $5 gain on Google on the swing trade there, and again, it was given on the Pro Trader watch list inside the research center. And again, join and take the free trial to get all these calls. I send out live alerts, folks. You get them to your phone or your email, whichever you choose, and you can get those there at inthemoneystocks.com in the research center if you wish. All right, let's take a look at some other slow stocks today. What's lagging while the market is up? And by the way, the Dow Jones Industrial Average right now is trading up about 73 points. NASDAQ's up 15. S&P's up about 6. So basically a 0.5% gain across the board, which is a solid gain. Considering how weak the markets have been lately, that's not bad. Citigroup and Morgan Stanley downgraded some of their fellow bank stocks today. Goldman Sachs is down $1.50 on the day. J.P. Morgan is down about 34 cents. So even with the markets being positive, the financials are a little bit weaker. I called the low 2 weeks ago. I'm still sticking by it, folks. We have not taken out the low. Take a look at Goldman Sachs. I nailed the exact low right here. This was the exact low on all these financials. I've played the financials multiple times now for profits off the lows by buying them. Even in this market, folks, I have been a buyer of the financials. In fact, right now, let's go to Morgan Stanley. Morgan Stanley, I got right here at the low pivot and made money up to the 20 moving average, sold into the 20, and then I rebought last week on Thursday, which was right here at the pivot low beautifully, and made money on Friday and sold half already for, I believe, something like a 50, 60 cent gain. And then again, I'm holding half with a break-even stop right here. So again, understanding where the lows on these charts will literally give you the essence or ability to make massive profits over and over again. I made money here, and again, I've already made money on this bounce here with holding a half position with a break-even for looking for another move up, at least to this point right here, this little pivot top, maybe even to the 50 moving average. I'll let it run. We'll see how the market is, and again, whether or not it's going to get strong or not, and that'll decide where I want to take profits off the table or not. All right, so again, the profits continue to be there. I don't care what type of market this is, bullish, bearish, up, down, whatever. I couldn't care less. I'm here to make money on either side of the market by buying stocks for a couple days off master levels. If you know the technicals, then you can make it. And I'm not talking about RSI, stochastics, MACD. That's a junk. If you use it, I hate to say it, but I think it's junk. It doesn't work anymore because everyone uses it. When everyone uses it, now that's not to say it won't work occasionally, but if you want your 80-90% success rates, you're going to have to think outside of the box and go to this price pattern in time, which will always be resistant to economies of anything, whether it's bullish or bearish moves in the market, and psychology, which is the main reason why the little guy generally loses out and the big guy wins. You got to know the technicals. The technicals will always lead anything the institutions do. You'll see it, trust me, before everyone else. When the institutions are beginning to load, that's when the retail investor is the most bearish on something. And you have to read those skills, and the price and the pattern and the time will tell you. So again, you want to learn this, you want to become a pro, you want to make millions in the market, simply put, join the Research Center. That's what everyone else is doing. So don't be left behind, folks. The money's there to be made, and again, we encourage you to take it. Have a great afternoon, folks. Again, market, beautiful little action today. Nice moves up. The key levels are working. The profits are continuing to roll out. And again, keep in touch. Get in that Research Center. Take the free trial. Take care.